Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday the 24th of June 2021 and we're publishing the 21st episode in our Bitcoin versus Gold and Silver series. In today's episode we look at a Bloomberg article published today which could suggest, or does suggest, the potential end of Bitcoin and cryptocurrencies not being that far away. And certainly all of those interested in making a quick buck and becoming millionaires and billionaires may prove to be disappointed moving forward. So let's take a look. Okay, just a quick recap of episodes 1 to 21. It's very brief. We looked at a range of topics including market sizes, motivations behind investments in cryptos and gold and silver, and also those major investors and hedge funds investing in cryptocurrencies and especially in Bitcoin. Now we have a playlist marked for this series. We highlighted that Bitcoin has been as high as $65,000 and the market capitalization of Bitcoin far surpasses that of silver, and cryptos in general are smaller than gold's capitalization. But if predictions are true, that won't be the case for much longer, especially if JP Morgan is right when it predicted the Bitcoin's price is moving towards $130,000 very soon, and 3-year projections are calling for $1 million Bitcoin. We also showed a comparison of performance between Bitcoin and other cryptos in general versus the gold and silver markets. Now today, we're looking at a Bloomberg article published this morning suggesting quite the opposite to what JP Morgan did, that perhaps the froth either has begun to fade or will shortly fade in this crypto area. Before we take a look, we shall express our view. The technology behind Bitcoin, blockchain, is here to stay and will be developed within the overall core of DeFinance. Whether Bitcoin or Ethereum or Litecoin, etc. evolves into major global currencies remain to be seen. But it does appear that too many institutions have already bought into at least the technology, if not the individual assets. Nevertheless, let's look at the article and you judge for yourself if this is just fear creating, enabling the establishment and those wealthy billionaires to buy in at lower prices as people sell in fear of their asset going to zero, or whether it's a true and accurate analysis. We will end this podcast at the end of the article, so please, if you don't mind, give us a like now, subscribe, and press the bell sign, just in case you forget. Meanwhile, before we launch, gold is standing at $1,778 and silver at $26.04. Very little changed from this morning. So here goes. Let's look what Bloomberg had to say. Bloomberg article, dated June 23rd, 2021. Headline: Bitcoin millionaires aren't what they used to be. After a 50% slump, the cryptocurrency speculative investment story won't be so contagious. Now we shall read this article because it actually covers the points we would like to make in today's video. Psst, I'm buying Bitcoin sounded like a hot tip during lockdown, but not anymore. In the almost 6 months it's taken for the cryptocurrency to soar past $30,000 to $63,000 and back again, it's now hovering around $33,000. A lot has changed in the real and virtual world. And despite the insistence of the laser-eyed crowd who claim they're holding on no matter what, not all of it is good for cryptocurrency. The speculative fever gripping hedge fund managers, bored day traders, and billionaires has cooled. Stanley Druckenmiller, for one, has cashed out part of his bet. Aggressive 100 times leveraged trading has fueled panic selling. What's important there is to bear in mind that much of the capitalization of Bitcoin is not actual funds but leveraged funds into the cryptocurrency, up to 100 times. In the light of post-lockdown summer, a lot of this year's milestone events, Tesla Inc.'s Bitcoin buy, Coinbase Global Inc.'s stock market listing, and El Salvador's adoption of Bitcoin as legal tender look like frothy red flags, not proof of maximalist high key that Bitcoin is inevitable. Competing narratives are emerging despite Bitcoiners' efforts to shout down any criticism as no-coiner FUD. Cool way to refer to fear, uncertainty, and doubt. The story of a golden ticket to wealth is harder to spread after a 50% drawdown, as is the idea of real-world adoption beyond trading. The energy footprint of Bitcoin mining, once dismissed as a lesser risk than crypto simply disappearing to zero, is now a very real problem for institutional investors and governments with green requirements to fulfill. Tesla's Elon Musk has found it impossible to ignore. The promise of a digital gold safe haven is still just a promise. Bitcoin's price correlation is closer to a Nasdaq tech stock than the yellow metal itself. Even its cheerleaders are reaching for .com metaphors after what looks like the third boom and bust cycle in Bitcoin's short history. In the eyes of veteran trader Dan Moorhead, the opportunity is a world-changing technology producing everything from decentralized finance to digital art collectibles. The risk is knowing what Amazon.com Inc. and what's Pets.com. If you're just long Bitcoin, it's kind of like in the 90s being just long Yahoo, he said this week, a bit of a backhanded compliment for the original cryptocurrency. It's hard to separate bold predictions of .com disruption from the other old cliches of day trader speculation, which need the promise of life-changing wealth to keep converting followers. The listing of Coinbase was supposed to be a big step towards establishing the crypto equivalent of an internet of value and digital finance. In April, the exchange accounted for 34% of total Bitcoin volume, according to data firm Keiko. Yet its biggest innovation since seems to have been succumbing to pressure to let customers trade the ultimate meme coin, Dogecoin, which is down by a third over the past 7 days. Falling or flat prices puts a serious dent to the fear of missing out, aka FOMO, and increases the potential for shoeshine tip moments to go wrong. Self-promoting crypto traders are starting to attract mockery, not adulation. Satirical UK comic Viz recently crafted the cautionary tale of Vince Fictitious, an overnight billionaire after investing a bit of chewing gum stuck to his shoe. Ads on public transport saying it's time to buy Bitcoin have been banned, but price charts might have done the trick anyway. Sure, there are still life-changing gains out there. Bitcoin's price remains at double where it was in November, and about half of the supply has been held for longer than a year, according to Chainalysis. But network effects are starting to rub off. Blockchain data shows a fall in the number of addresses holding $1 million or more Bitcoin equivalent since January. Pixel losses, realized or not, will have an effect on everyone from Lambo owners to Salvadorians making less than $5.50 a day who are being pushed into crypto. Beyond the enthusiastic drumbeat of social media, no corporate treasurer will feel much pressure to dive in when the Bitcoin purchases of MicroStrategy Inc. and Tesla seem more like examples of governance folly than the future of cash management. MicroStrategy this week paid around $37,617 per Bitcoin in its latest $489 million purchase. Tesla's holdings work out to an average purchase price of about $32,000 each. If success is staying power, then Bitcoin is far from failure. It's supported by elaborate market infrastructure, even if various players have attracted fines and bans from regulatory authorities. Maybe the real threat to the narrative isn't the price sinking to zero, but more normalized boring returns, glazed, not laser eyes that would evoke post.com maturity. Yet to even reach that level of acceptance will require faith that Bitcoin can overcome hostility from governments intent on flexing their post-pandemic muscles. Whether it's China cracking down on miners, or the Biden administration rightly identifying crypto as a ransomware enablers, the well-founded suspicion is the crypto revolution will lead to DeGov and not just DeFi. At a time when freedom is equated to the shape of a vaccine vial, and dependent on elected governments and fiscal stimulus so hated by Bitcoiners, the laser-eyed gospel is getting harder to spread. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.